Hi, this is Patrick Bartolotto. I want to continue our series discussing the general value of learning and understanding accounting by just covering a couple of the main uses of accounting. And my guess is at this point you've actually heard of some of these. I want to offer some clarity up front, and then we'll definitely explore these in much greater detail in future lessons here. But let's get started with what we have right now. There's three that I'm going to cover. I want to talk about financial accounting, managerial accounting, and taxation. Three ways in which we commonly see the use of accounting. So first, financial accounting. This is going to be the main thrust, the main focus of the vast majority of the material and lessons that I'm going to get into, because that's the focus here, which is that many of us in the business context are going to see and explore accounting as outsiders. It's not the only thing we're going to cover. It's just going to take up most of our time. Both the preparation and the use of information by individuals by the preparation of accounting for users outside of the company, and then the use of that information by those individuals outside of the company. So what is financial accounting? It's a system of reporting business performance, and specifically with the goal of reporting that to outsiders. It's going to focus on three main financial statements, and I'll cover them in extensive detail. But it's the creation of the information for the financial statements and a variety of other documents that we're going to spend time exploring. Who are external users? Who are the individuals using the information created in a financial accounting context? Commonly, those are investors, equity investors, shareholders, that idea, creditors, those who are lending, like a bank or a financial institution. But it's also much broader than that. It can include employees, suppliers, really anyone outside of the company who, back to our first lesson, wants to use the lens of accounting to have a better information about the company. So, of course, this would be used in situations like investing in a company, valuing a company, engaging in analysis, or comparing one company to another, making forecasts about the performance. But I want to extend this list to emphasize it's a good idea as a user of financial information, before you take a job, that you've reviewed the company's financial statements, that you've looked in and see, hey, how are they doing? And we will cover the opportunity to kind of explore, like, what things can you look for, what signs of strengths and weaknesses, et cetera. Accounting is essential in giving us that, some insight, a lens into how is the company performing, and specifically is financial accounting. So lots of applications of that. We'll explore this in significantly more depth as we go forward. That being said, it's worth mentioning a little bit of institutional details here. At the bottom, I mentioned US GAAP or IFRS. In financial accounting and through the entirety of these lessons, we're going to be following the rules actually that are established by US generally accepted accounting principles. That's US GAAP or International Financial Reporting Standards. So the US one is used in the United States and actually some other countries, and International Financial Reporting Standards are used in a variety of other non-US countries. Those are the rules that actually govern financial accounting. We are not going to do a deep dive right now, but we will actually get into, when we talk about accounting, it's using a series of the rules created by these bodies that guide the process of what we report and when we report and how we report. But that will be a significant portion of many of our lessons that follow. Definitely looking forward to it. Before we go into that, though, I want to just cover the other main areas. So historically, we've seen this be called managerial or cost accounting. Fascinatingly, I've seen this change quite a bit. There are many individuals who refer to this as corporate finance or strategic finance or a variety of other, arguably, more, fascinating sounding phrases here. And what is this? It's a system of reporting business performance to insiders with internal documents and processes. And I want to be clear here, in this one, in contrast to financial accounting, there is no external body like US GAAP that's telling us what to do. So effectively, what's determining what we report, how frequently we report, what information we use, that should be the company itself, the decision makers at the company. And so managerial or cost accounting is a way of aggregating data, disaggregating data, looking at data, analyzing data to make decisions about what's best for the company when you're working inside the company. So who are the internal users here? This could be really anyone inside the company, but managers in a variety of disciplines, those in financial planning and analysis, FP&A, those in corporate finance, strategic finance. You would hope that really anyone, sales, operations, et cetera, are using this information. Now, the information in a managerial cost accounting setting might be prepared by those with more of an accounting or a finance function, but likely it's being used by many others. Again, this can be granular as possible. There is no external body mandating what's done or the frequency. But the reason companies have a a role for managerial or cost accounting, whatever they're currently calling it is, because companies themselves make far better decisions and can, guide their operations and their strategies and the execution of that and change things if they have the lens of accounting, likely at a very significantly more granular level, but an updated lens of how the business is actually doing, where are they doing well, poorly, what should they fix, improve, enhance, plow forward with. So this includes a variety of applications like budgeting, variance analysis, planning, capital allocation, a whole host of internal investment decisions. To summarize all of that, managerial cost accounting is using information, the accounting information inside a firm to guide internal decisions so that the company has a great lens into what happened and can make the best decisions going forward at the speed and the frequency that works best for them. The last one, which I think in some ways in my conversations is the one that's probably talked about the most. And a reason for that might be that all of us really experience some direct exposure to taxation. So we may never go and create our own financial statements, and we may not work internally at a decision and oversee some of that stuff, but we almost surely are going to be involved in paying taxes, even if one, if we're generating income, or two, just sales taxes and stuff like that. So taxation is a part of accounting, but I want to emphasize that will not be the focus of our series. It's a part of accounting, but it's one that's salient to many of us, but there's so much of accounting that has really little to do with taxation. It's there in the background, but it's not front and center. Again, the goal of accounting is to report the way the business has been conducted. Taxes are a part of that, but they're just one part of that. So much of accounting goes above and beyond taxation. What is this then? Generally speaking, the simplest way to think about this is that one of the main areas of taxes is income taxes, and these can be levied at the federal or state and also international level. And that would be based on the rules set by the IRS, the Internal Revenue Service in the United States, and others. So versions of that at the state or local level. And generally speaking, individuals and businesses pay taxes on their income for a period. Now, the way that that's determined is different. It's actually very different across individuals and businesses, and we will get into that later, at least to touch on briefly. But this is a part of accounting, but a small part of accounting. Know that it's there, but set it aside. Just for completeness one more time, I would say that, yes, taxation would include things like sales taxes, value-added taxes, property taxes, etc. So without doing a deep dive into any of those, one aspect of accounting is taxation. I want to de-emphasize its role, and I want to spend more time on understanding the financial accounting aspect, how we use this information as outsiders to best understand what happened at a company. Then the managerial accounting aspect, how we use this information as insiders to best make decisions. And a smaller role, we will mention it later, is how do taxes come into play with all this stuff. So that's one more down, 10,000 more to go. Take care.